Hi, welcome to this video date, which is on Tuesday 30th of October. We're just going to be looking at trade setup today. It's GBP NZD, and this is one of my favourite trade setups. All we are going to do is do a round number play and look for reversion to a mean price. The risk is low to stop on this trade against the reward, in my view. You can judge for yourself, but what we are going to do is obviously go and look at the chart right now, but do keep in mind it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques and our daily technical analysis of 14 major Forex pairs, you can click on the link beneath this video and get live access to our member center. Right, let's take a look at the trade setup.
Chart of GBP NZD. I'll do my levels in a moment. I did say it was a reversion to a mean price trade, and just for those of you who don't know what that term means, just explain it quickly. We're going to use a simple Bollinger Band. Mean price is in the center, simple 20-day moving average, two outer bands set at 2 deviations from the mean. What that basically means is when you've got very small candles like you've got here in the middle, okay, yeah, not much movement, the bands are tight because volatility is low. When you get this action here, when you've got big volatility, the bands are wide, okay. Generally, when there's not too much interest in a pair or volume or news, you tend to drift around the 20-day moving average. You don't really get very far away from it. The prices are contained by the 2 deviations, okay. And when you get high volatility like you've got here and the bands really start to widen out, you then are moving away from the mean price. You've got speculative interest or news or whatever, volumes are coming in to push the price. There's a story of why it's moving, and yeah, you get big move up, but once you get too far from the mean, you're unlikely to get outside of this outer band on high volatility and stay outside of it for long. Now you can, of course, but statistically, more volatile the price becomes and you're at those outer bands, chances are of reversion back to the mean. That only works with high volatility, not low, okay? So high volatility, the bands actually, you can look at them and look for price to fade. I use the bands to back up my sort of view of price action, okay? Now, in terms of this move here, it's 1,000 pips. Not only does it revert to the mean, it runs away to the next outer band or the lower outer band. Okay, long way from the mean price. I personally think big chance now of a reversal to the upside. I think the selling will exhaust in the next day or so. And just in terms of trading, putting the order in. So I've got my line straight. Let me just get it where it should be. There we go. We just want to play round numbers, okay? And when I say play round numbers, we want to see what's happening at the round number, and then we can decide which way to go. Now, round numbers, I've done full videos on this, very important. A lot of orders are always on a round number or near it. Retail traders love putting their orders right on the round number, 10 pips either side, in my experience, okay? Institutions are heavy, do heavy volume round numbers as well. Now, in terms of round numbers, you kind of get a turbulence around them when all the orders collide. And then the battle is resumed between the buyers and the sellers. So to give you an example, we've come into the 194 level and we're trying to get through it. My little tail there, just sitting, literally just below the round number. We're not moving away from it. Okay. Now, if you were to look at the price action, not price action, the order flow in the last 6 hours. It's about 8 o'clock PM GMT, my time. Last 6 hours, there's no order flow. Hardly any orders going through at this level of any volume or size. So we're just hanging around the round number without pushing away from it. That, to me, is indicating exhaustion of the selling, certainly after a 200 pip move in one day. Okay, so basically not much going on in terms of orders. So I'm going to assume that the selling is exhausted. So what I want to do now is buy off the round number. I want some strength off this round number, and I'm not going to bother with a trend line or anything like that. I just want to come outside of turbulence, just on the other side, if that makes sense. So I'm going to go 194.50. You know, you get turbulence around the round number of about, in this pair, saying about 30 to 40 pips normally. So just basically want to come outside that turbulence, show that the round number has held. And it'll be 194.50 in. Okay. If this doesn't quite make sense, look at my round number of videos that I've done. And also I'll do one with an illustration of how flow works around the round number. But she's not going through. We don't think there's any more sellers. Just come away from the round number, we'll buy. Because the way the move has gone so far to oversold, it's not going to take much of a move back to hit stops, or people who may have profits to take profit or whatever. You know, when you get an extended price spike, it doesn't take much to turn it back. Okay, once sorry, excuse me, I didn't mean to say once. Okay, so yeah, so we're looking for it to go up, but where would we place our stop? We don't really need the trend line because I'll just use another round number. We don't think there's enough orders to force much more selling, certainly not through here. Okay, in our view, put a stop behind this round number, and then we're going to see if oversold is corrected. So how far could we go to the upside? My view is if you do it as a trajectory, if I get it straight, so project. Oh, sorry, can't say it even. Getting all my words jumbled up. I think we, obviously we come down, then we do the tumble. We should easily get to there. My own view is we're so oversold, we're going to overrun the level. We're going to gravitate back towards the mean price. I think 199 would be actually 199 would be a level you could aim at. Probably 2K. Sorry, 2K. I mean 2000. You have to see a price action develops. But my own view is very, very oversold. Yeah, like I said, 1,000 pip move quickly, 200 pips in a day. And a lot of this move today, a big percentage of that big drop down, is just simply nothing to do with GBP weakness, is it? It's to do with the cross being skewed by what the NZD is doing on the USD. So in terms of this trade, 1, 2, 3, 4, 4.5 to 1 in terms of risk reward. If it comes off, we shall see. But this trade, I know it looks very simple, and it is very simple actually. Do it all the time, and it doesn't have a bad hit rate on it. Well, it's got a good hit rate on it. It's probably get about 38 to 40% of these right. But the risk reward is very, very good. You don't need to get too many right. You can be under half and make decent amounts out of this sort of trading. Now, in terms of this setup, okay, it's a bit similar to CHF-JPY. You may have seen that video. We did an update to that one at the weekend. It's a similar concept, really. We're just using the round number in a different way. We used a round number rejection to get in. Here we're doing it in a slightly different way. But if you learn about round numbers, a lot of traders just don't understand how much order flow goes on around them, how institutions behave around them as well. It's well worth looking into. I'll do a fuller video on it, like I said, with some charts and flows and all that sort of stuff, how the order flow goes. I hope I made it clear today. I think I was getting a bit tongue-tied, but we shall see how this trade goes. Thank you very much for watching me as per usual. Take care. Have a good day.